Folks, the strategic Bitcoin reserve is so close I can almost taste it.
What does that taste like?
In case you missed it, President Trump has ordered the US government to look into creating a national stockpile of digital assets. And this has got legislatures around the world abuzz with talk of treating Bitcoin as a strategic resource. All of this has happened so fast that you may be left wondering, wait, why do governments need Bitcoin? Or perhaps, will any of them really do it? Well, good news. In this video, I'm going to break down what the strategic Bitcoin reserve is, why it matters, and which countries may be preparing to start one of their own. My name is Guy. Stay tuned. All right, let's begin with the basics. What is a strategic reserve, and why would a nation-state want to keep BTC as a reserve asset? Well, governments maintain strategic reserves of critical resources that can be released in emergencies or times of supply disruption. These resources are typically commodities and can be anything from gold, oil, and uranium to seeds and, if you're Canada, maple syrup. It's not hard to understand why governments keep reserves of resources like these. But what about crypto? What is it about Bitcoin that makes it worth mentioning in the same breath as traditional commodities of obvious strategic importance? Well, I'm preaching to the choir here, but let's remind ourselves why BTC is valuable. At the surface level, we all know that BTC is now digital gold. It's a catchy analogy based on Bitcoin's ability to serve as a long-term store of value. Bitcoin shares other similarities with gold too: scarcity, durability, liquidity, and so on. But at the same time, the logistics of acquiring, transporting, storing, securing, and liquidating gold give BTC some obvious practical advantages. So, taking all of this into account, the notion that governments might want to complement their traditional reserve assets with a bit of BTC is not as frivolous as skeptics like to imagine. However, it's only when you look beyond the gold analogy that a BTC reserve starts to look like a matter of strategic importance. In a report published last year, BlackRock hailed BTC as a, quote, unique diversifier based on its starkly different and, in many cases, inverted risk and return drivers versus most traditional investment assets. For example, as the report explained, BTC has no traditional counterparty risk, depends on no centralized system, and is not driven by any one country's fortunes. This means it has little downside exposure to macro risk factors like banking system crises, sovereign debt crises, currency debasement, geopolitical disruption, and other country-specific political and economic risks. That makes BTC sound like a great flight-to-safety asset like gold. But this would be understating it, because in practice, these macro risk factors are only fuel for Bitcoin's growth. Bitcoin is more like gold on steroids. If gold is a shield against inflation, BTC is the sword. And speaking of macroeconomic risk, Milton Friedman's comment that, quote, all roads lead to inflation is as relevant as ever in the current environment. In particular, sovereign debt has spiraled so far out of control that printing money to devalue this debt seems like the only plausible outcome. At the time of making this video, the US national debt is around $36.4 trillion and up by more than $1 trillion in the last 3 months alone. Meanwhile, the federal government spent more than $1 trillion paying interest on its debt in 2024. This represents the United States' second biggest expenditure and is substantially greater than, for example, defense spending. If this trend continues, there is no viable path for the government to pay its debt other than printing more money. More money printing means more inflation. More inflation typically results in central bank interest rate hikes. Interest rate hikes means the national debt becomes more expensive to service, and bigger debt repayments call for more money to be printed. It's a negative feedback loop, and as long as it persists, Bitcoin is likely to outperform. In recent years, Bitcoin has been described as, quote, the debasement trade, because it's a bet that pays off as money printing erodes the value of fiat currencies. The correlation between monetary easing and BTC outperformance was best demonstrated during the pandemic, when stimulus spending caused a sharp increase in the global money supply, or M2. In the 12 months from March 2020 to March 2021, M2 shot up from $74 trillion to $88 trillion, and BTC rallied from $5,000 to $61,000. Amid an apparently unstoppable charge towards more quantitative easing and inflation, the strategic value of owning Bitcoin makes a whole lot of sense. As Fidelity put it in a recent report, for nation-states, quote, facing challenges such as debilitating inflation, currency debasement, and increasingly crushing fiscal deficits, not making any Bitcoin allocation could become more of a risk than making one. Hold up a second there, Guy. Sorry to interrupt, folks, but I just wanted to very quickly tell you about the Coin Bureau Deals page. Now, this is the place where we have put together some of the very best deals and promos in all of crypto. So you can think things like exchange sign-up bonuses, trading fee discounts, and money off of hardware wallets, and much, much more besides. So if you want to check that out, coinbureau.com/deals is the place to go, or you can just use the link in the description of this video down below. Thanks very much, and now back to you, Guy. And yet, Bitcoin is still poorly understood. Large numbers of people, politicians included, don't know why BTC has any value at all, let alone strategic value of the kind that warrants creating a national reserve. For no coiners, the sight of a single Bitcoin trading at above $100,000 is probably inexplicable outside of the logic of a market bubble. It's tulip madness for the 21st century, nothing more, nothing less. However, for those of us who have been orange-pilled, it's no surprise to see BTC doing what it's basically always done. It's not really that complicated. Fiat is a perpetually sinking ship, and Bitcoin is the escape raft. Now, if we suppose that open accumulation of Bitcoin by nation-states could soon become widespread, then this gulf in understanding is a very big deal because it represents a historic window of opportunity. Like the early decades of the internet, the value of Bitcoin is not yet universally understood. This implies enormous growth potential, which is another way of saying we're still early. El Salvador and Bhutan serve as early models for governments considering establishing strategic positions in Bitcoin. Both countries have been able to glean substantial returns from their positions in a relatively short period of time. However, neither country is especially large or powerful, and this has helped skeptics to write off their Bitcoin adoption as eccentric and perhaps reckless experimentation. However, if a large and powerful nation-state starts openly accumulating BTC, it would likely trigger an international race by governments to establish a position of their own. The present window of "we're still early" would then close rather quickly as demand for BTC outstrips supply and price is bid up by nation-states all trying to clamber through said window before it's too late. At the time of making this video, Bitcoin's market cap is $2 trillion. This is an enormous number, but less so if we're talking about an asset that could be widely held in reserve by nation-states. For reference, the market cap of gold is more than 9 times larger, at around $18.7 trillion. The price of BTC could multiply several times over without its market cap coming close to gold's. So, in this context, any government announcing a strategic Bitcoin reserve would invite much scrutiny about its average entry. You may recall last summer when Germany was ridiculed for the sale of 50,000 state-owned BTC at $53,000. We laughed about it, but this was a terribly negligent move. If even the slightest care had been taken, the state could have raised billions of dollars more in revenue from this sale to spend on, hospitals, schools, and so on. Germany was a case study in how not to sell your BTC, and no country will want to do the same thing in reverse, i.e. establish a strategic reserve by blasting the top of a bull run. This would result in a strategic mess of massive unrealized losses that could persist until the following bull market. The Fidelity report I mentioned earlier also described the dynamics that we're likely to see if a US strategic Bitcoin reserve is established. Quote, "We believe the political and financial game theory at play will force other nations to follow suit. However, if this strategy were to be adopted, it is likely that nation-states would begin accumulating in secret. This is because no nation has an incentive to announce these plans, as doing so could influence more buyers and drive up the price. While it remains to be seen if this strategy will be implemented in 2025, those who would potentially adopt it will be incentivized to do so covertly. Now, this makes a lot of sense. So much sense, actually, that it's worth seriously considering whether any countries might be doing this already. There are logistical, legal, and political considerations involved that suggest covert accumulation of BTC may be easier in countries where the rule of law is weaker and clandestine organs of the state are powerful. Whether overt or covert, any active accumulation will depend on the political circumstances and orientation of the governments involved. If we're talking about North Korea, for example, the state already has sophisticated means of permanently borrowing crypto from other countries and might not need to worry about public disclosure. They're a bit of an exception though, and probably have a decent amount of BTC anyway. So let's take a look at some of the other countries where a BTC reserve is under consideration by at least some elements of the government and ruling classes. Front and center is, of course, the United States. 2024 was the year when the notion of a strategic reserve of Bitcoin escaped the imagination of the crypto community and found its way into the US Capitol. We have three key figures to thank for this. RFK Jr., who campaigned for the US government to accumulate 4 million BTC, Donald Trump, who deftly positioned himself as a pro-BTC stockpile candidate without ever actually suggesting the federal government buy more BTC, and especially Wyoming Senator Cynthia Lummis, who introduced the Bitcoin Act of 2024 to the Senate last July. Lummis's bill proposed that the US buy up to 1 million BTC over the next few years as a matter of strategic priority. The senator recently became the first ever chair of the Senate's new subcommittee on digital assets, where she is very likely to pursue the BTC reserve idea. Meanwhile, shortly after President Trump's inauguration, he ordered the creation of a government crypto working group tasked with, among other things, exploring the creation of a national stockpile of digital assets. This was tantalizing because it signaled Trump's apparent intention to follow through on his crypto-related pledges, without actually saying anything new. If you haven't been following, the substance of Trump's comments about a BTC reserve is a pledge to not sell the government's existing holdings, which consists of BTC confiscated by law enforcement. He has never explicitly called for the government to buy more BTC, and his new executive order has not changed this. In fact, it actually alluded to the possibility that the US government will just be ordered to keep what it already has. If there's anything notable about this order, it's the broadening of the language to reference digital assets and not just BTC. The order says that the working group will, quote, evaluate the potential creation and maintenance of a national digital asset stockpile, potentially derived from cryptocurrencies lawfully seized by the federal government through its law enforcement efforts. This has fueled speculation about the inclusion of altcoins in a future reserve. Ripple CEO Brad Garlinghouse is known to have lobbied Trump personally to include altcoins in the potential reserve, although some Bitcoiners say this is a deliberate attempt to sabotage the prospects of any federal crypto reserve seeing the light of day. Ripple has even been accused of planting a false story in the New York Post that claimed President Trump was receptive to the idea of a reserve of altcoins of US origin. There's much intrigue and speculation around this, and for more, check out our video about the outlook for Ripple and XRP under the second Trump administration, which is linked to down below. For the time being, there is no concrete indication, not yet at any rate, that the federal government will start actively buying BTC, although it is a very real possibility. Okay, our next stop is China. Now, like other countries, the suggestion that China might start accumulating BTC is framed as a reaction to the US doing so first. We know that Beijing is no friend to crypto, and there's no indication from the government there that it will establish a BTC reserve. However, China's special administrative region Hong Kong has spent the last few years rebranding itself as a digital assets hub, and Beijing has not so much tolerated as actively encouraged this transformation. This has some wondering if Beijing might not be using Hong Kong as a laboratory for crypto policy liberalization. As for a crypto reserve, Chairman Johnny Ng of the Hong Kong Legislative Council's Web3 and Virtual Assets Development Subcommittee told a state-owned pro-Beijing newspaper late last year that he had been lobbying the Hong Kong government to pilot the adoption of BTC as a strategic reserve asset. Notably, he framed this as a matter of national security. And since national refers to the People's Republic of China, this implies that Ng is imploring Beijing to consider establishing a strategic BTC reserve. Now, there is no indication from Beijing that it has any such intention. However, as the United States' primary rival, the stakes might be high enough for China to be accumulating BTC in secret. Because, as I alluded to earlier, if Beijing buying BTC were to hit the headlines, it would send shockwaves around the world and likely send the price of BTC absolutely skyrocketing. This would not be conducive to building a position on anything like an optimal cost basis. This is just speculation, though. Okay, next we're headed to Russia, where the government recently made history by making the use of BTC to settle international trade deals an official policy. This is the most significant case of Bitcoin adoption at the nation-state level after El Salvador and Bhutan. Russia is many times larger and more powerful than either of these countries, so its trading in BTC will be remembered as a landmark development in crypto history. Amidst all the Bitcoin-related excitement of late, one minority party lawmaker asked Russia's finance minister to consider the creation of a strategic BTC reserve. The minister, Anton Silyanov, said the government had no immediate plans for this, but notably didn't rule out the idea in principle. The crux of Silyanov's argument was basically that BTC has already pumped a whole lot, and buying right now would incur significant downside risk. He concluded, quote, "We'll see where things stand in 5 to 10 years. Now this sounds like a rather throwaway comment because the price of BTC will likely be much higher in 5 to 10 years. Still, we take his point. He's not opposed to a BTC reserve in principle, but wants to be prudent about it rather than FOMOing into a local top. So that's a not now, but maybe later from Russia. Then we have Brazil, where a lawmaker introduced a bill resembling Senator Lummis's Bitcoin Act to the National Congress in November 2024. Congressman Eros Biondini's proposal to create a strategic Bitcoin reserve called ResBit would have the central bank accumulate BTC until it makes up 5% of Brazil's national reserves. This would be around $18.6 billion worth of Bitcoin, or 186,000 BTC, if we assume a cost basis of $100,000. We have yet to hear any update in English language media on how Biondini's bill is progressing in the Brazilian Congress, if at all, but we will keep you posted. Moving on, there's a libertarian candidate in Poland's 2025 presidential election who has enthusiastically backed the idea of a strategic BTC reserve. As of late January 2025, poll data had Sławomir Mencen trailing in third place, though, with just 13.1% of respondents supporting his campaign. However, the elections are scheduled to take place on May the 18th, so Mencen has ample time to catch up and persuade the nation to buy Bitcoin in the interim. Meanwhile, somewhere to Poland's left, we find Germany, where former finance minister and FDP party leader Christian Lindner urged the German parliament in January to discuss, quote, whether to issue Bitcoin as a strategic reserve asset. Previously, Lindner had called for both Germany's central bank and the European Central Bank to add BTC to their reserves. Elsewhere in Europe, the Czech central bank governor Aleš Michel expressed his interest in acquiring, quote, a few BTC as part of the bank's diversification strategy, although he said that this would not be a significant investment for the bank. Any such decision would need to be approved by all 7 members of the Czech National Bank's board. However, board advisor Yanis Aliapoulios confirmed to Cointelegraph, quote, CNB is not now considering buying crypto assets for its reserves. However, Governor Michel did not rule out further future debate on this topic. So, a bit like Russia then, not now, maybe later. And we need to give a special mention to Japan here because although the Prime Minister's office there was dismissive of the idea of a Bitcoin reserve, the politician who asked the government to consider the idea was named Satoshi. You really can't make this stuff up. So, the lead of the United States has placed us tantalizingly close to BTC being designated as a strategic resource and actively accumulated by governments. Trump's task force is going to investigate this idea, and of course we have Senator Lummis heading a new Senate subcommittee where she is likely to pursue the strategic reserve agenda. And yet, for the time being, the strategic reserve is still just a proposal. Governments are not accumulating BTC as a matter of strategic importance, at least as far as we know. On the other hand, it's true that it would be much more prudent and advantageous for governments to accumulate BTC covertly before a major power starts bidding up the price in broad daylight. The incentive to accumulate quietly and before anyone else is great enough to make it plausible that governments are already doing so. But, on the other hand, depending on the government, this may or may not be politically practicable. So, how will we look back on this moment, Q1 2025? Will it be the precipice of a new era of government stacking sats and driving the price of BTC beyond our wildest imaginations? Or will we groan in hindsight at how top signal all of this screams? How will the BTC reserve be perceived in the depths of the next bear market? Will governments spot their chance at a generational entry, or will confidence and interest in crypto once again be so low that no government wants to touch BTC because, it died for the 100th time or whatever? Now, we'd love to hear your takes in the comments down below. And if you got something out of this video, be sure to drop us a like. To stay up to speed on all the latest Bitcoin reserve developments, make sure you're subscribed and have your bell notifications turned on, and that way you'll never miss another upload from us. And if you're looking for what to watch next, then why not check out our video on what cryptos the President of the United States himself is into. As always, thank you for watching, and I will see you next time.